Now, as we set out on the second quarter of 2020, no one needs to be reminded as to how dire Q1 was for a number of areas of the global economy, not least of which, of course, was the medical emergency that's been enveloping much of the globe. And of course, the mining sector has been right in the thick of it. John Meyer joins us now from SP Angel. John, it's good to talk to you and great to be able to catch up with you as we all are working from home. Just explain how things are looking going into the second quarter of 2020 for you as a mining analyst.
Well, it's a very variable situation at the moment, and clearly we're heading into the worst part of the crisis quite rapidly now. Markets have taken a huge hit, which we're all aware of, and now appear to be bouncing along the bottom. We've seen fresh institutional buying of equities down at these levels. So it's very nice to see the institutional fund managers buying up and supporting stocks that they like and the key stocks that they want to be in. I feel really quite encouraged by that. But I'm not sure. We certainly haven't seen the worst of the bad news to come out from the virus as yet.
Yeah, and of course, one of the things that we've seen a lot of in the first quarter has been all this stimulus that's come through from central banks and also from governments. And I'm wondering just whether or not there's much evidence of that yet in the markets. We've seen them, as you say, bump along the bottom. How much further down we've got to go remains to be seen. But I also noticed as well that Beijing is pledging more stimulus. When will we see the stimulus kick in? I guess in part this will be seen in your area, in especially base metals, when we see some of the buying coming back in.
Well, it was good to see that news this morning that Beijing were bringing in a whole raft of stimulus measures, and it's more about how they're doing it than the actual physical amounts. And in many cases, they haven't said exactly how much liquidity they're pumping into the system, but they have said they're going to support small and medium-sized enterprises. They're going to allow municipalities to issue more bonds. And so there's a lot more, shall we say, what I would call direct action. And that follows on from last week when President Xi put out a very grumpy statement saying he wasn't prepared to bail out the global economy. So it's good to see that they are coming in now. But of course, China is just looking after the Chinese. What they're expecting to see is a drop-off in demand in the Western world as the West becomes the center of the coronavirus, and particularly in the United States, where consumer demand will fall away as lock-ins and self-isolation takes over in more and more states of the US. So, but at the same time, Chinese industry and manufacturing in particular is restarted. And if we look at the metals inventory drawdown numbers on the Shanghai Metal Exchange, we see quite a lot of metal now going out of warehouses as manufacturers restock.
Okay, so let's take a look at other areas of what's happening in China. We know as well from evidence that's been collected that China is beginning to start to go back to work. We've seen a big drop, of course, in some of the pollution levels that have been reported across some large Chinese cities as the lockdown continues in some areas. But I also see that China is wanting to extend its subsidies on electric vehicles. We've spoken a lot before about this particular area of the market because it's of interest to you through some of the battery metals. Is that something that you're looking for some extra interest in Q2, or again, is this something that we're going to see later on in the year?
Well, one of the side effects of the coronavirus is people who go to hospital but recover will have had serious lung issues and pneumonia, which will take time to fully recover from. And so clean air becomes all the more important for those pneumonia survivors. So the Chinese government has extended the VAT exemption on electric vehicles for another 2 years. That's to stimulate demand in that direction, which is good. We've even noticed here in Oxfordshire that skies are clearer here, which we hadn't expected. But curiously, one should note that the sunscreen effect, in fact, there's a technical term for it, of aircraft polluting the upper atmosphere, means that we're now getting brighter sun, particularly in the southern hemisphere, which will cause more skin cancers and things down there. So the world is actually going to heat up slightly faster than before, because we haven't got so many jet engines in the sky leaving trails of pollution, which actually shield the Earth from from the stronger rays of the sun.
Let's take a look at some of the base metals and battery metals to watch out for. Is Q2 going to be a point at which we're going to see a recovery, do you think, in your mind, or do you think that COVID-19 will continue to keep a lid on any demand that we might otherwise have been seeing at this time of year?
Because I think we're going back to work, shall we say, maybe not in offices, but I think industry will go back to work fairly quickly, probably starting June, July, August. So for me, second half of the second quarter starts to see a return to manufacturing. In fact, in the United States, there is a move to try and keep manufacturing open anyway. That's assuming the supply chains can manage to keep things going. So because it's important for economies to limit the economic impact and not to necessarily shut down completely. Whereas for services business like ours, where we can more easily work from home, and we're all getting used to that now, for manufacturers, it's the stop restart process is a bit more tricky, and it's much better if they can actually keep the lights on and keep something going. So for me, I do see a pickup in demand for metals over the next 2-3 months, and certainly see the supply-demand balance not necessarily changing that much this year.
So where is the investor action, though, at the moment?
Well, investors have been standing back and watching the falls, and in some cases selling the stock ahead of that. No, I do see investors looking for key moments to buy back into the market, and I do see a recovery, broadly speaking, from here. Sure, there are probably going to be a couple of more of news shocks with high mortality rates in Europe and particularly in the US, which I think is going to be hit really quite hard. But I think we're also going to see a rapid recovery in stock market terms. There's nearly $10 billion worth of stimulus now being injected into or being pledged into the markets, and this is going to have an impact on recovery. And I think policymakers know from what we had in the global financial crisis that actually they need to stimulate and get things back on the road. And the threat of inflation is less worrying than the threat of deflation.
One of the things I've noticed in your daily notes that you send out at SP Angel has been the increase in number of reportings for these small gold companies. I know you've got a long client list, and gold producers are amongst those. And I noticed this morning you've got news out from Ariana Resources. Gold certainly seems to be an area where demand for this particular part of the market is holding up.
Yes, I mean, gold prices are significantly higher than they were. There's been a lot of gold buying. We saw yesterday that the Russian and Chinese central banks jointly said they were going to stop buying gold in this environment. And presumably that's just a reaction because the price is rather high. But I suspect that we're going to see more buying of gold in places like India, which is traditionally a very big gold buying market, and actually in the United States, where people are going to say, OK, we can see there's a lot of cash money printing going on. What is something that we can hold that is readily realizable and that actually we can hold physically and isn't going to be subject to the same inflation? Well, gold fits that bill very well.
Yeah. Okay. All right, John, it's good to catch up with you. Thanks indeed. Stay safe, and hopefully we'll be able to speak to you again in the next weeks as we see the second quarter continue to unfold. That's John Meyer, working from home in Oxfordshire with his views on the market as a mining analyst and partner at SP Angel.